Hey traders, it's John Fortune here of this week's weekly Forex Forecast. I hope you're having a great weekend. Let's start off with the DXY as we always do. In last week's video and in previous videos, I have been bullish on the DXY and I have favored dollar strong positions in the markets. We did come up and take out the target at the 92.91 in the DXY. And going into next week, I do still favor bullish setups in the DXY. I am bullish on this currency. Last week, we already had a pullback, so any continued pullback, and you can see last week we had this sell-off after this double top pattern, came down, took out the target, which for a double top is 1-to-1. This candle, we saw the profit taking come in, and we started to rally again towards the next key of resistance to the upside. So any pullback in the DXY is simply going to be viewed once again as an opportunity to look for bullish setups into the 93.31. Now, not only do I go into next week with a bullish bias on the DXY itself and therefore favor dollar strength positions next week, but I also think risk off or deflationary setups next week, very similar to last week, are going to be the best setups. So you're looking primarily there at the commodity currencies for shorts and the risk off assets like the dollar, like the yen, and like the Swiss franc for long positions. And of course, the key is to pair those together. Next is euro-dollar. Now, last week I was bearish on euro-dollar. I was looking for further declines. We didn't take out the target. We didn't really go anywhere last week. There wasn't much happening in euro-dollar. But I did state that any pullback towards the 1.1870 should be viewed as an opportunity to look for short positions down to the 1.1704. So very simply put, for anybody not involved from last week, any pullback once again will be viewed simply as another opportunity to look for bearish reversals down to next key of support to the downside and the target set, the 1.1704. Now, the interesting thing about euro-dollar as well is we are slowing down here, although we have not yet reversed. There is a developing, what's known as a falling wedge, which again is a sign that the market is slowing and may be reversing. It is not yet a reversal. A reversal comes on a break higher from this. That would be a confirmed reversal pattern, just as if you had a double bottom, you would need to reverse higher first before it was a double bottom. Otherwise, you're just buying lows. So something interesting to note, euro-dollar is slightly slowing down, although I have seen falling wedges break through with momentum the bottom of these very often as well. So just to be clear, I do not see this as a reversal just yet. It would need to reverse. I am still bearish and looking for shorts down to the 1.1704. Next is Aussie dollar. Now, Aussie dollar is a market that I've been highlighting to the downside for a while. And last week we came down, we took out our target at the 0.7340. We had a really nice sell-off, and that was the move for last week. Going into this week, this pullback, as we had at the end of last week, is simply being viewed as another opportunity. And the deeper the pullback, the better, because we get better risk-to-reward setups down to the target. But any continued pullback simply viewed as another opportunity to look for bearish reversals in this market down to the next key of support to the downside and the target set at the 0.7255. Next is New Zealand dollar. I like this market because we also have that commodity currency versus the risk-off currency dynamic. But last week we're looking for a sell-off into the 0.6842. We did get a nice sell-off, but we didn't come and take out the target. This just shows you out of the two primary commodity currencies, Aussie and New Zealand, the Aussie is the weakest. So I would favor or prioritize Aussie shorts over New Zealand shorts going into next week. However, this pullback is setting up a bear flag pattern, and any reversal pattern to the downside in this market next week is simply going to be viewed as an opportunity to look for short entries down to the next key of support to the downside and the target set, the 0.6842. Next is pound dollar. Now, pound dollar was a market which I did leave out of the forecast for a number of weeks, and this was because the market was very, very choppy, and the forecast is designed to find you the markets which are most likely to move and provide you opportunities for the upcoming week. However, last week I was looking for further declines, and I highlighted this as one to watch to the downside. We had a really nice sell-off taking out both targets to the downside, and we finished the week right at the second target of the 1.36130. So very simply put, going into next week, this is viewed just simply as a big bear flag in pound dollar. We have a really nice deep pullback, which is providing us with really good potential risk to reward to the downside. Any continued correction next week is simply viewed as an opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 1.3566. Next is crude oil. Now, recently I highlighted the fact that we had a developing head and shoulders in this market, and this pullback in previous videos was highlighted as an opportunity to look for further declines and a sell-off in crude oil. We came down hard and we took out both targets to the downside. We bounced more or less, although we did break through here at the 65.510, and we had a big rally, a big short covering rally and a bounce to the upside in crude oil after taking out the second target. Very simply put, going into next week, I do still favor bearish setups in crude oil. This pullback here is simply viewed as it currently stands as a bear flag setup, and any pullback towards the 75.050, as long as we don't start trading above this, any bearish reversals above this level I will filter out. But any pullback towards this level, if we start to break down, is going to be viewed as an opportunity once again to look for short entries down to the next key of support to the downside and the target set, the 66.70. Next is US dollar CAD. Now with crude oil weakening and with the DXY grinding to the upside, I did highlight US dollar CAD as a market to look for long positions, and we had a really nice rally in this market, taking out both targets and reversing at the second target of the 1.27470. Going into next week, I just simply view this as a pullback, as another opportunity to benefit from a rally in this market and any continued correction towards the 1.24570. And again, if we start to trade below here and then reverse, I will filter out any of those setups because this is the line in the sand here. But any pullback in this area will be viewed as an opportunity to look for bullish reversals. And I'm going to be looking up towards the next key of resistance, the upside and the target set, the 1.2784. The second CAD pair I like is CAD Franc, and as crude oil is weakening, we're seeing weakness across the board in the CAD pairs, and paired with the risk off currencies next week, I think these are, once again, as we looked at last week, going to be good setups. Last week I was looking for further declines in CAD Franc, and we took out both targets to the downside, and we reversed right at the second target at the 0.71890. Going into this week, I view this bounce from target 2 as simply another opportunity to trade this kind of a sell-off to the downside in CAD Franc. Any continued pullback, as long as we don't start trading above this level, is viewed as an opportunity to look for bearish reversals, and I think we could get those bearish reversals quite early next week because you can see we're starting to form somewhat of a double, potentially even triple top here. But if we start to break down in this market, that is going to be a great opportunity to start to look for bearish entries down to the next key of support to the downside and the same target 2 as last week, the 0.7189. Next is CAD Yen. Now CAD Yen is a market I've been highlighting to the downside for a while. We've been, every time this market has pulled back, looking to short, looking to short, looking to short, and the previous correction here was a really nice sell-off to the downside. We took out all 3 targets to the downside pretty much in one go. And going into next week, I just view this bounce as another opportunity to look for short positions in this market, and I view this as a big bear flag setup in CAD Yen. So any continued correction towards the 88.49 is simply viewed once again as an opportunity to look for bearish reversals. And if we reverse here, similar to what we just looked at in CAD Franc, this would be a nice double top reversal. Any reversal in this market is going to be viewed as an opportunity to look for shorts once again, down to the 85.45. Next is Aussie Franc. Aussie Franc is another market I've been highlighting to the downside, and this was one of my favorite markets, as I previously stated when people have asked me. I do go into next week with a bearish bias on this market, and once again, I think the probabilities of getting lower lows in this market is very high. You can see last week we came down, took out both targets, and we turned to the pip at the second target of the 0.67180. Going into this week, I do like this market once again for short setups. We've already started to correct, again, a nice bear flag setup in this market with strong momentum. We're starting to sell off a little bit, but if we can come back higher next week, that would be fantastic, as any deeper pullback in this market simply is going to be viewed as an opportunity to look for bearish reversals. Down to the next key of support to the downside and the target set, the 0.6696. Next is Aussie Yen. Aussie Yen is another market that I've been highlighting recently as one that I like to the downside, and this previous pullback was a great opportunity to short this down into the targets which we took out last week at the 80.920 and the 80.650. Going into next week, this pullback in Aussie Yen is simply viewed as another opportunity to start to look for bearish reversals once again in this market. And if we start to pull back a little bit further, although any reversal here, we should still get nice risk-reward setups, but any bearish reversal in this market is going to be viewed as an opportunity to look for short positions, down to the next key of support to the downside and the target set, 79.80. Next is New Zealand Franc. Now last week I highlighted this pullback here as an opportunity to start to look for bearish reversals and for a sell-off towards the 0.6306. We did have a really nice sell-off, but we didn't take out the target. And so this pullback, as it currently stands, is simply viewed as another opportunity to start to look for bearish reversals. Again, as long as we don't start to trade significantly above the 0.6451, so we come up in this area and then we start to reverse, that would be filtered out. But any bearish reversal before trading above this level will be viewed as an opportunity once again to look for short positions down to the next key of support to downside the target set, 0.6306. As I said at the beginning of this video, I do like New Zealand shorts going into next week, but I prefer Aussie shorts and I also prefer CAD shorts over and above New Zealand shorts. In other words, I like New Zealand Franc to the downside, but I think I like Aussie Franc to the downside and CAD Franc to the downside more. And the final Forex pair we have here is New Zealand Yen. Now last week I highlighted the fact that this correction was an opportunity to look for bearish reversals and a sell-off into the 75.63. We did have a really nice sell-off right into the target before bouncing to the upside. Going into this week, I still view this pullback because we have not started to trade above the 77.48 significantly in any way. I still view this bounce as an opportunity to once again look for short positions. Any bearish reversal in this market, I'm viewing this just as a large bear flag opportunity. Any bearish reversals is simply going to be viewed as an opportunity to look for short entries once again, down to the next key of support to downside the target set at the 74.81. Next is SPX. Now last week I was bullish on this market and I was looking for a rally into the 4430.580. We did have a really nice rally after gapping down and we stopped just shy of the target. So any pullback once again in this market this week is simply viewed as another opportunity to look for bullish opportunities into last week's target of the 4430.58. And once we break through here, going to be looking up towards target 2 at the 4485.83. Next is the Nasdaq. Now last week I was bullish on this market and viewing pullbacks as an opportunity to look for bullish entries. We did come very close to the target set last week at the 15236.09. So very simply put, for anybody not involved from last week, any pullback in this market is once again considered a great opportunity to start to look for bullish opportunities into the 15236.09. And if we can get a break through here, going to be looking towards target 2 at the 15378.31. Next is the Nifty. Now last week I highlighted the 15685.80 as the key area of support in the Nifty. We did pull back and we bounced from this area. The Nifty, if you look at it, is quite corrective. We are in a correction as it stands, in an uptrend, albeit, but we are in a correction. So the opportunities to the upside in the Nifty are not as good as they were when we were rallying over here. However, I do still favor long positions and further advances in the Nifty overall. Any pullback once again to the 15680.80, the same as last week. Any pullback towards this level is simply going to be viewed as an opportunity to look for further advances into the target set at the 15987.45. Ideally, what I would like to see in the Nifty though is it break out of this correction, and that is when the better opportunities will come back into the market. Next is the Dow Jones. Now the Dow Jones has been very choppy recently, hasn't featured in the forecast. However, last week we started to break out of this correction, which looks like a big A, B, C correction. And last week we actually broke the top over here, which also confirmed an inverse head and shoulders. So going into this week, this market is bullish once again, and any pullback in this market would be viewed as an opportunity to start to look for bullish entries up towards the next key of resistance, the upside the target set at 35604.55. Next is gold. Now last week I noted that this market was structured to the upside in the face of a strong dollar, and as a result I was going to leave this market, and I favored silver to the downside last week with the stronger dollar instead of gold to the upside. And last week we actually reversed. We have confirmed a head and shoulders pattern in this market. So going into this week, I do favor short positions in gold, especially as we still have a stronger dollar. Any pullback is simply going to be viewed as an opportunity to look for bearish reversals down to the next key of support to the downside of the target set at the 1767.40. Next is silver. Now silver was a market that I highlighted to the downside last week, and I said I favored this to the downside instead of gold to the upside because of the stronger dollar. We did take out both targets to the downside last week, and we started to correct towards the end of the week in silver. Going into this week, very simply put, I would hope that we can get a deeper correction because the deeper the better, risk to reward setups to the target. But any continued pullback in this market is simply viewed as it currently stands as a correction of this big bear flag. And any bearish breakout to the downside going into next week in this market is going to be viewed as an opportunity to look for short entries down to the next key area support to the downside the target set, 24.46. And last but not least, we have Bitcoin. Now, last week I was highlighting this market for short positions down to the 30,214. We traded into this level before bouncing to the upside. We had really strong momentum to the upside, having taken out the target last week at the 30,214. Going into this week, however, Bitcoin has reversed to the upside, and I do have a bullish bias on Bitcoin. Any pullback in Bitcoin is viewed as an opportunity now to start to look for bullish setups into the next key resistance, the upside the target set at the 35,286. Now, just bear in mind the DXY itself is still bullish, and this may actually cap any moves to the upside in Bitcoin. We may find long positions with a strong dollar actually quite difficult and choppy in Bitcoin. So what we may see, I'm thinking, is that as the dollar continues to rise, maybe into next week or the week after, we start to see Bitcoin pulling back and forming somewhat of an inverse head and shoulders down in this area. And as the dollar rises, we may see Bitcoin correcting, and then if we start to roll over in the dollar in the next couple of weeks, that would be the opportunity to start to buy Bitcoin. So I am bullish on Bitcoin, but with a stronger dollar still prevailing, I just question whether it may be a little bit early to jump into long positions just yet, and we may get a deeper correction in this market first. So that is it for me for this week, guys. As always, I hope you enjoyed this video. If you did, please let me know by liking, sharing and subscribing. I do still like those kind of deflationary risk off moves in the markets next week. I think there's lots of good opportunities in those currency pairs going into next week. I just want to say a big thank you to everybody who likes, shares, comments on a regular basis. And I want to say a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.